Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk on Thursday, the 5th of July. Starting off with Edenville Energy, we're close to a recovery or lasting recovery, we think. Bounce off the 50-day moving average at 0.3 today. Probably want to see an end-of-day close just through 0.35 before we can assume that we'll head back to the 0.5 zone, which was resistance on the way down. Moving along to another stock which has been highlighted here before on the Bulletin Board Heroes, EckTech. Not quite as happy a ride as maybe we expected. Current situation is that we're struggling to hold above the floor of this rising trend channel from March around, the 0.75 area. Probably allow a stop loss down just below the 50-day moving average at 0.66, so at least above the 50-day line, the recovery argument from May, and sub 0.5 is still just about hanging on in there. Moving along to European metals, and here a happier picture with a gap higher through the 50-day moving average. Yesterday, a bear trap gap reversal for the late June rebound, which was from just below the March floor. View at the moment is that at least while we're above the 50-day moving average around the 20 pence level, we could head up towards the 200-day line and at the top of this diverging triangle at 30 pence plus over the next few weeks. Start of the show yesterday and today, as far as the Bulletin Board Heroes have been concerned, is Hvivo, where you can see there's been a gap higher today, which hits the implied target of this rising trend channel from April. So we've done the job here. Obviously, we were already around 80 pence this time yesterday, but it's nice to see these things working. Could be a lot more on tap for bulls of this stock. So still hoping for 130, 140, where we were early last year as an eventual target here, and that valid while we hold above that 90 pence peak from last month. Going on to stock which has given investors rather a rocky ride over the last year or so, but you can see here that we've got this overall U-shaped recovery. We had a bear trap gap reversal through the 50-day moving average in December with very strong signal, and that really did work, even though again it was a rocky ride. Situation now is that we've got a likely retest of the best levels of last year through the mid to upper 60s. If you're a real fan of the shares, though, you might be looking for 100 pence, which is the top of a wide rising trend channel from early last year. But obviously, at this stage, that looks a little bit ambitious. Only back below the 50-day moving average at 46 pence. Delays or questions the upside scenario. Finishing off with a request stock, rather stock, not sock. We've got Mediazest here with situation being that the shares backed off quite sharply from the initial surge, the surge rather at the end of December last year, and we've been trying to struggle back above the 50-day moving average, currently at 0.14 pence. That's probably still the level to beat, or the feature to beat, in terms of looking for a revival and a retest of 0.25. In the meantime, as long as we're above 0.1, which is basically the post-October support, one would be reasonably confident that the base building here was going according to plan. The other point to note there is that the 200-day moving average, the black line there, is still rising, so that is normally a sign of positive momentum in a situation. That's it from me. More updates at the same time.